Hello and welcome everybody to day 36 of the trading marathon here on this channel. My name is Daniel, and in this video I'm gonna introduce you to the smart money concepts, which are a very powerful tool in chart analysis. Specifically, we are going to talk about liquidity sweep, break of structure and order block, and I'm gonna introduce you not only to the concept of those three smart money concepts themselves or to the general principle. After today's video, we are also going into the charts and we are going to point out where exactly you can detect each of those smart money concepts on the chart and what these are going to tell you to do. And most importantly, we're also going to discuss how you can use this knowledge in combination with the Elliott wave theory to get your trade entries and exit signals. Okay, so it's going to be a very important lesson. Let's start with the graph that let's first go into the Ethereum chart, because I want to show you that we actually got the rejection that we were pointing out or we were expecting in the analysis we made yesterday or day before yesterday, or I think we made it in Bitcoin. We expected a crash towards the downside in Bitcoin, right? Let's go over to the Bitcoin chart for a second. As you can see, it's already going to happen, So that's the exact thing that we expected, and probably it will follow through towards our target area, which we pointed out in yesterday's video with the Elliott wave theory. So for everyone that's tuning in here right at this point, feel welcome to, just go at the beginning of the playlist and start the trading marathon day by day, because only then it will make sense for you. But let's now go straight into the graph that I've prepared for you, and you can see in three different colors, blue, green and purple, the liquidity sweep, the break of structure and the order block. Those are three different concepts which I'm gonna explain to you in today's video. First of all, we're gonna have a look at the liquidity sweep, which is basically the moments when the chart grabs previous stop losses or take profit orders, okay? So above or below a recent high or low, which many people used for a place to put their stop loss at or their take profit. Because exactly when these points are going to get reached, that are the turnaround moments that you are trying to get. So whenever you're searching for an entry moment, you should always watch out for a possible liquidity sweep to get your entry there, okay? So you don't want to have your stop loss above previous highs or lows, because then you could be the victim of a so-called liquidity sweep. But when you find an entry in your trade, you should always wait until one of the previous highs or lows, the smaller highs or lows on the smaller time frames, are getting taken out so that you can use this as your entry liquidity. So on the opposite, we have the so-called break of structure, which is when a high or low, a previous high or low gets broken, but it doesn't return there, okay? It just breaks through. It just pushes through with power, and that's a so-called break of structure. So as you probably hear from the concept, those moments when we go below or above previous highs or lows are very important decision points where we are either getting a liquidity sweep or a break of structure. If we're getting the liquidity sweep, then the overall trend will continue. For example, if we're seeing an A wave to the downside, let's talk Elliott wave, okay? A wave to the downside, and then we are forming a three-wave move in an ABC for the B wave. This three-wave move, as the B wave, it will take out, first of all, the A wave high, second of all, previous highs within the A wave that came down, okay? So the A wave is consisting out of wave 1, 2, 3, 4, 5, so it will take out the highs of the wave 4 or the wave 2, for example, in the B wave, and then give us the continuation. So the C wave or the B wave, or the C of the B in this, so to say, well, let me show you that on the chart. Otherwise it gets confusing. For example, if we are highlighting here this ABC, okay? So then the A wave didn't necessarily took out previous highs. Then the B wave just made a correction, and the C wave, it took out, first of all, the A wave high, second of all, a high which is in the middle of the previous wave to sweep liquidity. That's the exact concept that we are talking about, okay? And then the trend reverses. So if that's happening, that's a classic short confirmation. We already made our Elliott wave analysis, so for us it's pretty nice, because we didn't even need to guess which one of these, liquidity sweep or break of structure is going to happen at this point. We already expected a liquidity sweep and then a turnaround towards the downside based on our Elliott wave analysis, and then we just literally see the liquidity sweep playing out, okay? So that's then really when okay, everything falls into place. In the other hand side, if we would have broken higher and taken out the bigger highs, for example this one, the previous wave 4 high, it would be a so-called break of structure, and it would be an alarming signal that we could, earlier than expected, turn around towards the upside and raise from here. But since it didn't happen, as predicted, we didn't get any break of structure, and now you need to be very careful, because let's just follow our Elliott wave count. If we are seeing a wave 5 towards the downside, this wave 4 will very likely take out this previous wave 4, okay? And this is now the point where it gets very tricky. Because if this wave 4 would go above this wave 4 high, then it would be called a break of structure. But this one, this wave 4, would be only the smaller wave 4 within the smaller wave. So that's why it's not counting as a break of structure. It will be just a liquidity sweep and then turn around towards the downside for good, okay? Same as we saw here. But if we go above the bigger, larger time frame wave 4, then it's called a break of structure. So that will be something that we can also use as additional confirmation for our analysis. Just imagine, for example, we will now see the low, then a liquidity sweep, we enter a short, it's playing out as we think, then we see an impulse towards the downside. And then at this moment we enter a long. But at what point do we know that we are really turning towards the upside? In the moment we are seeing a 5-wave move above the previous wave 4 high, because that's the moment when we have a break of structure. And now comes the third smart money concept, because let's pretend we will get this 5-wave move towards the upside here, okay? I will just make it in a nice Elliott wave count. This is obviously not the moment where you should enter, so you should wait for some kind of retest. So in Elliott wave language we would just say this is a smaller wave 1 and we are waiting for a wave 2. But what actually in the smart money concept language is happening here, they are waiting for a so-called retest of the order block. What is the order block? The order block is, so to say, the distance between the last liquidity sweep of the whole movement and the final low, okay? So this distance is basically forming a so-called order block. So from the last wave 4 of a movement until the low of the wave 5, or also towards the upside, this is possible, and those are resistance order blocks. In this case, it are support order blocks. And, based on the smart money concepts, you would say that somewhere, like in the moment we are seeing the 5-wave move towards the upside, somewhere we should retest this order block towards the downside. But obviously, as you can see, the order blocks are a really, wide spectrum, so you will get way more detailed results by using the normal Fibonacci retracement levels of the 1-2 setup. So the order blocks are not necessarily a tool that I'm using for my trading at all, but the liquidity sweeps and also the break of structure is the very extremely important tool from the smart money concepts that I'm using for my analysis and my trades, and that I also want you to understand, okay? So you need the Elliott wave analysis method in order to determine if we will get a break of structure or a liquidity sweep, which one of those more likely. But then once it's happening, you need to decide for yourself and see with your eyes which one it's gonna be. So that's a very important thing. So that's what we are going over tomorrow and in the next 3 days more detailed. And then we will get a recap of the whole trading execution strategy and also how to move on from that moment for you guys. And I really hope you like this course so far, guys. I wish you have a very good day, and we see each other in tomorrow's video. Until then, stay hard. Ciao, ciao. Ah, wait, 1 second. Yesterday's half marathon. Day 35, sorry. Now, stay hard. Ciao, ciao.